Stock market ends mostly higher, but not just weekly loss as fiscal stimulus hopes fade. Is going to be what I'm going to talk about today, as well as the title of the article I wrote a report about last week. So before I actually talk about everything that happens, I'm going to first go over the terminologies that I learned from this article. The first one being a benchmark. I kind of always knew what this term was, but didn't really know it. I didn't really actually know it properly. So it's the proper definition is a standard against which an index of similar classes of securities have their performances compared. The next is the NASDAQ Composite Index. So it's a market capitalization weighted index that consists of over 2,500 common equities listed in the NASDAQ stock exchange. And then there's the Council of Economic Advisors, and that's an agency within the Executive Office of the President of the United States that is responsible for providing advice and analysis to assist the president in creating economic policies. And lastly is a pullback, a moderate decrease in the price of stocks or commodities from a recent peak that occur during an uptrend. These are the four terms that I learned and didn't actually properly know before reading this article. So what actually happened? So just as the title describes, the major indexes ended mostly high, but suffered some losses in the last week. That being the week prior to the 23rd of October. So the S&P 500 rose 0.3%, and last Thursday gained 0.5%. The NASDAQ Composite Index ended with a gain of 0.4% and gained 0.2% Thursday, the prior Thursday. The Dow Jones Industrial Index fell 0.1%. This is mainly due to a 10% drop in Intel shares. And for the week, the indexes experienced actual losses. So the S&P 500 dropped 0.5%, the NASDAQ fell 1.1%, and the Dow decreased by 1%. However, during the week, smaller indexes such as the Russell 2000 gained 0.4%, following trends of outperforming larger indexes. So here is a shot of the Jones Industrial Average from last week on the 23rd. And you can see how it is sort of following a decrease. And you can see also that it closed with a decrease of 0.1%. Now, why did it happen? So for closing mostly high, that there was still some hope for a recovery, a stimulus to be implemented in the near future, but the pullback in the market, or I should say what investors are thinking will be a pullback in the market, was due to the fact that prospects for a stimulus package will faded and economic recovery will likely be postponed. And thus the larger indexes suffered some losses. Sectors tied to the recovery are doing better than the headline indexes. However, it seems that the delay of economic recovery and another all-time high until after the election is causing the pullback in the major indexes. So what are the potential impacts? Well, at worst, the uncertainty of the election as well as the COVID-19 will continue until after the election results, which may cause the major indexes to continue decreasing. If the decline continues, spillover effects on other sectors could result and would lead to a much more difficult recovery. But likely it could just be a pullback in the market. And this uncertainty may cause further decreases, but the indexes may actually just recover and continue in their uptrend within a short period of time. So my opinion is since it probably will be a pullback and these indexes will eventually go back to their peak, people actually could take advantage of this opportunity to buy stock before the price rises again. But people should be wary of the 10.6% drop in Intel shares which is caused by a drop in sales and server chips. And it's also important to be aware of the COVID-19 spikes, as they pose a very high risks currently in the market. And here are the references. Thank you very much for listening.